Let's discuss the mutual funds unit trust. Another name is we just shortly discuss about its functionality. Now we are going to discuss in detail. Mutual fund industry is really popular, especially in US, in terms of small funds managed by the firms, different kind of fund managers, and they are free to do in terms of easiness of the fund itself. If you see, there are three types of mutual funds. One is open-ended, one is closed-ended, and one is exchange-traded funds. When we say open-ended, of course, a mutual fund or unit trust is open-ended if the fund is under an obligation to purchase back shares or units from the investor at any time at the price based on the current value of the fund net assets. Same way, how we calculate its NAV, that is funds asset minus fund liabilities, to get the net position and divide with the number of shares divided by unit issued. In terms of close-ended, this is the number of shares or unit made available to the public is limited. At the inception of the fund, shareholder units who want to exit the fund must sell their shares to the open market. Any such price of close-ended funds are dependent on the market forces, demand and supply, which can give them a result as a premium or a discount. In terms of third category, that is an exchange traded fund, are open-ended mutual funds that can be traded on daily basis. They are designed to mirror the return of an index in a particular market or a sector. In terms of ETF, there will be an appointed fund manager who is going to handle this all. Let's discuss the background of the fund management, how it started, how it works. Initially, there are professional managers who manage the various type of assets like share, bonds, commodities, securities and currencies, and other type of assets such as real estate, or to present investment goal to the investors. Quite recently, the term asset management is properly used, and we have seen the growth in terms of asset management companies. There are 10 global asset management companies which are quite famous. The top of this is the Barclay Global Investors, State Street Global Advisor, Fidelity Investment, and Vanguard Group. JP Morgan is one of them, Capital Research and Management Company, ING Investment Management, Deutsche Asset Management, and UBS Global Asset Management, and Credit Angelo Asset Management. These are one of the most famous asset management companies. What are the factors that leads to this expansion of asset management companies growth? What are the factor and motive behind? Of course, for a specific asset there should be a specific skill. So expertise and professional management is the first thing that is required into, and diversification is possible in terms of mutual fund. It's no much cost to float and launch this kind of funds, so the lower startup cost and liquidity is also relatively high because these funds are adequately managed in general terms. So if you see the mutual funds, there are a lot of stakeholders in terms of shareholder, custodian, distributor, sponsors, transfer agents, management companies, and there are a lot of people who are involved, fund managers with the mutual funds. In terms of management of the company, each mutual fund is registered as a separate management company or trust, which is created by a sponsor. The fund with the family are described as a group of funds and managed by the same managers. Same way, sponsor is typically a financial service company such as mutual fund company, brokerage, bank, or insurance company in general. Shareholders is the fund of managed for the benefit of the investors who buy its shares. In terms of investors are given detailed information about the fund throughout its perspective. In any case, it is going to be a periodic or the annual reports in between. By studying these documents, shareholders can determine whether the fund is doing good or not. In terms of board of directors to oversee the management of the fund and the work of the portfolio managers. The board ensure the fund manager adhere to the investment objectives and vote on the fund manager's contract or any changes to his or her fee. Directors earn fee as specified in the fund prospectus. Moreover, it's about fund managers. What is a fund manager? Sometimes known as investment advisor. Invest the fund asset according to the fund stated investment objectives by reaching and choosing specific securities or other assets that will be bought or sold. Underwriters are the distributor. They buy and redeem funds shares either directly or through a third party known as the principal underwriter or distributor. These are the specialist people in this world. Mutual fund must place their portfolio security and cash with a custodian bank for the protection. These securities must be separated from the bank's asset to protect them in case it goes bankrupt. We have a concept of transfer agents. These are third parties used by the mutual funds to keep records and distribute the information. Transfer agents calculate and distribute the dividend, maintain accounts, and prepare and mail account shareholders. General structure of a unit trust fund is it is governed by a deed, and there is a fund manager who is doing administration. There are trustees. We have a portfolio of investment, and is in the shape of return. We are getting capital gains or any kind of specific income. Mutual funds mitigate the risk associated with particular equity through diversification and provide investor access to the new markets. In terms of the Islamic mutual funds, we discuss shortly about Islamic funds. And Islamic funds is having a pool of money which has to be invested in those activities after screening effects which is permissible in terms of Sharia. Islamic mutual fund comes into as a contractual agreement between the parties. The first thing is the fund manager, the other is investors, and the third is the custodian. And we use the concept of wakala in such kind of contracts.